Hi, in today's video we will take a look at what is volume node, the difference between high volume node and low volume node, and most importantly, how to use them in trading. A volume node refers to price level or narrow price range where significant amount of trading volume has occurred as seen on volume profile. There are two main types of volume nodes, a high volume node and a low volume node. High volume node is an area with heavy trading activity. Price tends to spend more time here, and this area acts as a strong key level. These levels, or areas around these levels, are often used as key levels for entry or exits. Low volume node, on the other hand, is an area with very little trading activity. Price usually moves through it really quickly, like a knife through butter. When high trading volume causes price to break out strongly in one direction, that volume area, high volume node, often acts as a powerful reference point. In uptrend breakout, the high volume area, high volume node, below usually becomes a strong support during a pullback, as buyers are likely to defend their positions. In a downtrend breakout, the high volume area above typically becomes strong resistance, because sellers will want to defend their positions here. Therefore, we can use these areas as key levels for potential trades. So, what is a high volume node? A high volume node is price level where a large number of contracts have been traded. It acts as a price barrier where the market often pauses and consolidates. These areas are perceived as a fair value zones where both buyers and sellers agreed and were willing to trade actively. A low volume node is price level where there is a little trading interest. Price tends to not stay in these zones and move through it really quickly. So that was a theory, and now how to use these volume nodes. Volume nodes are most useful when we measure them over a longer time period. So when we measure volume profile of daily period, weekly period or monthly period, we identify where during these periods the most contracts were traded and where interest was minimal. Since price tends to move quickly through low volume nodes, we can use these low volume nodes as areas for our trades. To put it simply, there are no barriers in the way. And that's exactly what we want to see, a clean, fast move without unnecessary consolidations. High volume nodes can serve as a point where we can place stop losses, because price often has difficulty breaking through these high volume areas. Or we can use these high volume areas, high volume nodes, as the levels for entry or exits. Here I measured a 1 week period, and we can see that above the current price there is a low volume area, which we can use as a zone for our position. So if we observe order flow absorption and decide to open long trade, we can target the high volume nodes above, knowing that the price has no significant obstacles in this zone. A very useful tip: always try to use price levels just around these high volume nodes, because price might return exactly to the high volume node level, but it can also reverse earlier. So in this example, when I see high volume node, I want to target a level slightly below this high volume node. So volume nodes shows us where we have space for our trade and where it's a good idea to close it. And if we know that we have space for our potential trade, we can then just simply wait for confirmation. If you want to continue learning, on our website you will find complete order flow course. You will also find free PDF materials for each video, so it's easy for you to learn. I'll leave you link in the description of this video.